Hi, and welcome everyone. My name is Cooley. I'm the Targeted Outreach Director for the California Department of Financial Protection and Innovation. Thank you for joining our webinar today. We will be getting started very shortly here. I know it's right at noon, just a little past, but I do want to give everyone another minute or two to get logged in. So thank you again for joining, and we will get started shortly. You know what? In the meantime, I do have some poll questions that while we're waiting for everybody to jump on. So yeah, please answer these different quiz questions and we'll get started very shortly here. Okay. I'm going to go to the next question and give everyone one more minute to jump in. It's pretty interesting here. 100% everyone here right now is they have a bank account, but it's almost split um, between people who use more than just checking and savings. So let's share the results real quickly, just so you can see. And you know what? I am going to launch one more question and give everyone another minute to join us. So this question is about financial literacy. We're always interested to know are these financial education webinars interesting or useful to you? And how interested are you for us to continue doing this? Maybe topics, what other topics are you interested in? So please let us know. Okay, just about to get started here. Let me end this poll, and I do want to show the results, which is really amazing, by the way. So 98% of you said that financial literacy is very important to you, which is amazing. That is almost everyone here, which I thank you. To me, myself, financial literacy is incredibly important as well. So let's go ahead and get started. Thank you for taking the poll. Really, really great topic here. And so let's jump right into it. A little bit of housekeeping. So first, your cameras and microphones have been turned off. Please use the Zoom's Q&A feature to submit your questions. You can submit your questions anytime. We do have a dedicated section at the very end of this webinar to answer your questions that you submit into the Q&A feature. A number of you also email me your questions, and I'm going to try to get through those, get to those as well. So next thing, the views and opinions expressed in this presentation are those of the presenter. They do not necessarily reflect the views and positions of the DFPI. This presentation is for educational and informational purposes only. This is not financial advice and does not replace independent or professional judgment. We really encourage everyone to do your research, and I'm really happy that you're here to do that kind of research. So the DFPI does not assume responsibility for the completeness of the information presented in this presentation. Again, do your research. And if you want more information, you could visit our website. We also have an email outreach at dfpi.co.gov. Please feel free to email us to follow up about questions about this webinar. You want partners to partner with us on other presentations. We want to hear from you. Okay, a little bit about the DFPI, the California Department of Financial Protection and Innovation. Who are we? What is our role? Well, the DFPI's central purpose is to maintain a fair, healthy, and trusted financial marketplace for all Californians. Our department does this through regulation and enforcement of financial services, products, and professionals. We also provide presentations throughout California to help consumers, to help protect consumers, to help inform them and to prevent them from falling prey to frauds and scams. For more information, visit our website at dfpi.ca.gov/consumers. Excuse me, my allergies are pretty crazy right now. All right, so let's talk about, using a bank or credit union. I know all of you, I think, answered the poll that you have a bank account, which is amazing. That's great. But there are some benefits that many people don't know about besides just using checkings and savings, right? So obviously, the vast majority of banks and credit unions accounts are FDIC insured, or if it's a credit union, it could also be NCUA insured. We'll talk a little more about that. You can build credit. We'll talk a little more about that in the future slides. You can also track and manage your financial transactions. So many banks offer budgeting tools, but at the very minimum, you can actually easily go into your account nowadays just to look at all the different transactions that are happening. Convenience. Money is directly deposited into your account. You have quick access to it, and you can also transfer money quickly. You also have access to other financial products and services, and we're going to talk a lot about that in the bulk of this presentation. So with banks and credit unions, many of them offer specialized services and advisors, right? So whether you're looking to get a car loan or looking to buy a house, many of them have specialized professionals. Maybe you want to get into investing who can actually help you with that. And of course, if you have a business or you're thinking about starting a business, you can always start a business account, right? A business checkings account to keep your finances separate with a bank and credit union. And of course, keeping your money, your financial wealth in a bank is obviously safer than stashing it under the bed, right? Or just carrying cash. All right, let's talk a little about FDIC insured. I know probably all of you here, if not many of you at least, know what FDIC is, but the Federal Deposit Insurance Corporation, also known as the FDIC, insures depositors' funds up to $250,000 per account. So that's $250,000 for your checkings, $250,000 for your savings, in participating banks and savings associations, right? So participating FDIC banks and financial institutions pay for this insurance. You want to look for this particular logo. If you're looking to open an account, you want to make sure that it is FDIC insured for your own safety. Now, what is the NCUA? Well, the NCUA is the National Credit Union Administration. It's an independent federal agency. It oversees and regulates federal credit unions. It also provides insurance coverage for deposits held in these credit unions. They operate very similar to the FDIC. So it's again, standalone insurance, provides up to $250,000 per depositor, per account, per credit union. This is very important. Obviously, not all credit unions are federally insured by the NCUA. Credit unions could also be FDIC insured. You just want to look at that and see, who's insuring your account, right? Obviously, participating credit union banks or financial institutions pay for this insurance, and their logo looks like this. Okay. All right, just a little bit of foundational knowledge here. Let's talk about banks, credit unions, and banking products, right? This is a question I get a lot, by the way. What's the difference between a bank and a credit union? Well, banks are primarily for-profit institutions. They operate with the primary goal of providing returns and value for their shareholders, right? So their owners, shareholders, investors. They're a for-profit institution. There's a lot of reasons for you to use a bank, right? Um, Most banks are larger networks, right? They have you know access to more branches and ATMs. They usually offer a wider range of financial products and services as a bank. Um, Many banks, especially like the federal banks, have some kind of global presence, right? They may operate on national or international scales. So if you do a lot of traveling overseas, or to Mexico or certain countries, you may want to consider a bank that has a presence there. Um, and of course, many of them offer specialized services, right? Certain banks may specialize in certain services or products. And so again, that's a feature of banks. Let's talk about credit unions, right? Credit unions are not nonprofit. They're not for profit institutions owned by their members, who are also usually their customers, right? So reasons to use a credit union: member ownership. It's owned by its members, which means you have a vote in its decisions and operations. When they want to do something like expand or build a new branch, buy a branch, usually they have that voted by their members. Um, Credit unions are very community focused. They usually serve specific members, such as employees, community residents, organization members, right? So it might be like an educational employee credit union of some sort. It could be like a, what do you call it? Yeah, it could be just a employee credit union as well. They usually have lower fees. So lower fees for ATM, maintenance fees, account fees, that kind of thing, overdraft fees. They also, in general, have offer or may offer higher interest rates on savings accounts, lower interest rates on loans, and maybe other more favorable terms on other products. Again, that's because they're not providing value. They're not for profit. They're trying to give value back to their members, right? And profit sharing. They may share the profits with their members in the form of dividends, lower loan rates, higher interest rates on deposits, that kind of thing. A couple of things to note. First, banks don't have membership requirements, right? So for the most part, if you have the right documents, you could go to a bank and just open an account, right? Um, Credit unions may have different membership requirements, right? You may need to be an employee or a family member of an employee, or be associated with that organization of some sort. Do your research before you look into joining a credit union or a bank. Make sure it's right for you, right? And of course, you can always have both. You could have bank accounts and credit union accounts. I have both, and I use them for two different separate reasons, right? Again, I like to have access to some of the benefits of a credit union, but also I like to have access to the wider range of ATMs for a bank. So you do you, right? Make sure it works for you and your situation. Let's talk about a couple other different types of banks. And the reason I want to go through this is because I get these questions a lot whenever I go and I talk to individuals, when I do workshops, and there's a lot of confusion. So I just want to again try to straighten things out, provide a lot of information, educational purposes here. What are online banks? Well, um, you know, most online banks don't have physical brick and mortar locations. Um, they they're generally FDIC insured, but they're not always FDIC insured for accounts. So you definitely want to double check before you open an online bank account to see if the account is FDIC insured. Um, these online banks almost always are just online. And so, in able to access your accounts and look at them, you have to access a website or use their mobile app. Um, you most times when you're trying to deposit cash into them, you could do it through like a bank ATM, but they don't have physical locations where you could go and talk to someone, right? Uh, Here's a couple of different examples. Again, not promoting these, just simply giving you examples. So we have Axios, Ally Bank, Varo, SoFi Bank. Those are all online banks, which don't always have physical locations. In fact, I don't think Ally has any physical locations. A couple notes here. If the online bank does not offer FDIC insurance, avoid putting your money there, right? And that's because if your account, especially if you have a lot of money into that account, if that bank uh, disappears or becomes insolvent, you may lose all your money, right, in that account. So again, really want to make sure that your accounts are FDIC insured. Also, the DFBI does not currently license any banks that operate solely online. Just a little bit of a note here for you. Okay, what is a neo or challenger bank? Well, typically a fintech company that provides banking services as an intermediary, using a bank partner to store the monetary value of its consumers. It's a lot of jargon here. I'm going to explain in a second. So, a couple examples include Chime, Dave, Greenlight. And if you use one of these, understand who you should contact if you have issues with your account, the fintech company or the underlying bank. All right, let me explain what these neo or challenger banks are. They're kind of a service, and they are kind of a middleman between another bank that they're partnering with. So the bank actually holds your money, but the fintech company, which might be using like a app, like the Chime app, they're the ones who are giving you access to transactions, right? So you could pay through the Chime app. You could move your money through the Chime app, but they're not actually holding your money. The money is actually being held by a bank that's partnering with this service, right? So don't be fooled that these services are a bank, right? If they're claiming to be a bank, that is very, very one, they may not be insured, right? FDIC insured, but also they're again a third party. And if you have issues, which happens a lot with these services, you want to know who you can go to get help, right? Who is the partnering bank, and how can I access my funds and that kind of thing. The DFBI does not currently license any institutions that provide banking as a service to neo or challenger banks. So just a little bit heads about that. Heads up. Here's another one, right? Money transmission services that are not banks, right? So any business that issues money orders, traveler's checks, or other types of monetary value are considered money service businesses. So examples include Square, Venmo, PayPal, Zelle. I know these are very popular money apps, right? And they do, like, I think Square offers a debit card. They also offer, I think, a credit card, but and you could store money there, right? People pay you on Square and you could have money there, but they're not a bank and they're not FDIC insured. So again, here's a caution here. When you're using Venmo or Square or PayPal, you could store money. Yes, you could store money on their platform, but it's not insured, it's not guaranteed. And of course, you want to be very careful, right? These are more money transmission services. They hold the monetary value, and so that you can again pay and pay for other services or products. It's basically transmitting money, right? These MSBs, money service businesses, still need to be licensed by the DFPI. Okay. All right, a little bit about getting an account. I know all of you replied that you have an account, but again, just want a little baseline knowledge here, because again, I get questions a lot about how to start a bank account, right? So things like, obviously you want to choose the right bank and credit union. You want to determine what account is right for you, and then the documents is where I get a lot of questions, right? What do you need? Well, government issued photo ID, right? Driver's license, passport, state ID, social security number, or an ITIN, which is an individual taxpayer identification number. So for immigrants out there, whether you're documented or not, maybe you're here on a work visa, you could get a bank account. What you need is an ITIN, right? Individual taxpayer identification number. I get that question a lot. You could get a bank account. You do need a proof of address, right? and also employment information. Sometimes, not necessarily, right? You may not be employed, but you might be getting certain benefits, and obviously an initial deposit. So many banks actually require a minimum deposit to open an account. You could visit a bank physically, or you could also apply online. Of course, you want to complete the application form, and once your account has been approved, you just activate it, and then of course put in your funding for the account. I do want to plug Bank On. You may not know what the Bank On programs are. I'm going to talk really quickly about that. What is the Bank On program? Well, Bank On coalitions are partnerships between local government agencies, financial institutions, and community organizations that work together to provide banking access to unbanked and underbanked residents. What does this mean? That means that for many individuals that might have a hard time getting a bank account, the Bank On program provides, oh, let me go to the next one. So the Bank On program provides them access or easier access to accounts that may not have minimum deposits, right? Or minimum, or have no fees or limited fees, that kind of a thing. I'm plugging this because I personally believe the Bank On program is amazing. Right now, these are the Bank On programs I'm aware of. There might be a couple more in California, but big shout out to City of Sacramento, Inland SoCal, of course, LA Department of Consumer and Business Affairs, Bank On in Oakland, Bank On San Francisco. They have great programs. Visit their links if you're interested in one of those, or share it with individuals who doesn't have a bank account, right? They might be using an app to manage their money, and they don't know that these programs are available. Okay, let's talk. This is really the meat of this presentation, right? How we're going to build wealth through banking. Okay, there's a lot of banking products. These are the most common, but there's a lot of banking products that help you build wealth, right? We're talking about certificate deposits. We're talking about high yield savings accounts, money market accounts, IRAs, right? Individual retirement accounts, brokerage accounts, credit building cards, and of course mortgages. And I'm actually going to go through each one of these in the next couple of slides. But I do want to let you know there are so many different banking products. You could, I'd say, do your research, right? If you're looking to build wealth in a specific way, many people go outside the banking industry, right? They'll maybe open up they'll go to like a brokerage firm, or maybe they'll use an app to start investing. And I say check with your bank first, right? They may have a product for you, and because you have a relationship with that bank, it might actually be a better way to not only access your money, but also use their services, right? All right, let's talk about certificate of deposits. Basically, it's a product where you agree to deposit a certain amount of money for a fixed period, which is also known as the term or the maturity. In return, the institution pays you an interest, usually higher than the savings account rate. So features include term length, right? CDs have very specific terms. It could be as short as, honestly, I've seen CDs that are like 1 month long, and they could go even longer, like 5 years, 10 years. I've seen 10-year CDs before. The downside of CDs is usually when you deposit your money, you cannot withdraw it unless you pay some penalty, right? CDs usually have a fixed interest, and this interest is paid out regularly, right? Could be monthly, quarterly, annually. You got to check on the terms of your CD, and they can pay also at the end of the term, right? You get one lump sum of the interest at the end of the term of the CD. CDs are usually very, very safe, and that's because they are insured by the FDIC up to $250,000 as of 2024. CDs have a minimum deposit, right? Every CD that you look at, they're going to require 1,000, 5,000, or there are minimum deposits, and those deposits are usually related to the rate of return that you're going to get. Yeah. And then let's talk about high yield savings accounts. So high yield savings account, type of savings account, it usually offers a higher interest rate compared to traditional savings. So we talked about, the interest rates. These vary significantly depending on the bank or credit union or institution, but they're again generally higher than a regular savings account. They're safe. They're very safe, again, because they are insured by the FDIC. And unlike stocks and bonds, high yield savings accounts are not subject to market fluctuations, right? You're not investing the money. The money is in a savings account. It's getting a high yield interest rate on it. So your principal is safe, right? Um, so the money initial deposit you put in there is safe. Liquidity, right? You can withdraw your money at any time. Generally, there are no penalties. And there might be banks may have certain restrictions. If you withdraw your money a lot, they might have minimums again for your savings high yield savings account. Yep. So some accounts require minimum balance, so you don't want to withdraw too fast or too much from your high yield savings account. Um, and of course, another really great feature is you have easy access to it. You can track your account, your high yield savings account online and through an app. Uh, let's talk about money market accounts. So money market accounts is a type of account offered by banks and credit unions. It combines, the features of both the savings and checkings. I'm going to talk a little about the difference between like a CD, a high yield savings, and a money market account right after I go through these key features. Okay. So first of all, the biggest plus you get with a money market account is that you get like check writing or debit card access, right? So if you open up a money market account, usually they'll give you a checkbook if you still use those, uh, or a debit card. So like a high yield savings account is different because it's a savings account and you can't usually spend money, right? You can't take a debit card and buy something off of your high yield savings account. A money market account, however, gives you debit card access. It's like a checkings account. But of course, it has a higher interest rate of return, right? So yeah, again, higher interest rate compared to savings accounts. Again, also insured by the FDIC or NCUA. Um, and again, minimum balances. You always want to be careful. If you're spending money out of your money market account, you want to be careful about those minimum balances. Um, Easy management, right? Funds can be easily accessible or accessed. So again, we talk about CDs, which usually have a strong rate of return, but you can't take money out of it, right? You deposit money for a certain term and you could take money out, but then there's usually a penalty. And then you have high yield savings account, which is really just a savings account with a high interest rate on it. The only way to withdraw money is to again go to your bank, or you could withdraw money from like an ATM out of your high yield savings account, but you don't have like a check that you could write against it or a debit card where you could just use the money, right? And then now you have money market accounts. So think of it like a checkings account with a very high interest rate return. Um, and the reason for all of these three different types of products offered by banks is because they all serve different purposes, right? If you have a lot of money but you're not going to use it, CD might be a better option. But if you need access to your money, like a large deposit, maybe a high yield savings account is what you're looking for. But if you're going to be doing a lot of transactions, right, maybe a money market account is more might be more useful for you. Okay, let's talk about IRAs. And I want to apologize ahead of time. This is a whole nother presentation, right? When we talk about IRAs, 401ks, that kind of thing, I'm going to give you a very high overview, right? IRAs, individual retirement accounts, it's a type of investment account designed to help individuals save for retirement, right? They offer different kinds of tax advantages, and they could grow. Some of them could grow tax free. There are many. I say many. There are several types of IRA accounts, and each one has different criteria, contribution limits, tax benefits, that kind of thing. I'm just gonna again just giving you a high level overview. So key features include different tax advantages depending on the type of IRA. income eligibilities, contribution limits, right? Again, this is a product offered by, mm, I don't want to say all banks, I want to say some banks offer IRAs, right? If you're looking to open an IRA, right, you might have a 401k you're contributing to already, but you want to contribute more to, because if you don't know, 401ks have a contribution limit. Maybe you hit that limit, but you still want to put more money to invest, and you want to take advantage of those tax advantage features. So you could go to your bank and ask them, hey, do you guys offer IRAs, right? Individual retirement accounts? And a specialist could talk to you about the different IRA accounts they have. Uh, we talk. There's contribution limits. This is kind of a federal limitation, right? The individual IRA contribution for 2024 is $7,000 a year. $7,000 a year for those under the age of 50. 8,000 for those under the age of 50. For those age 50 or above. So let's say you can contribute this year $7,000 into your IRA. Again, if you're under 50, if you're over 50, it's 8,000. Your partner can contribute an additional $7,000 to their own IRA. Again, if they're under 50, over 50, they can contribute 80, right? So it's one of those things I get a lot of questions about, and I just want to make sure it's kind of clear here, right? Giving you more information. IRAs offer a wide range of investment options, right? You can invest in a lot of different things: stocks, bonds, mutual funds, even CD, certificate deposits. The type of investments that IRAs, the money you put into IRAs, depends on the financial institution that you're using. And of course, withdrawals before the age of 59 and a half may be subject to a 10% withdrawal penalty, as well as raising your annual income level, right? And so you'll be taxed on that as well. Brokerage accounts. Again, I do want to say, if you do have any questions, please feel free to put it into the Q&A, the Zoom's Q&A feature. There is a dedicated section at the very end. We'll talk more about this. Again, I'm not a financial advisor. I'm just giving you more information here, but I will try to answer your question if you can. All right, brokerage accounts. It's a type of financial account that allows individuals or entities to buy and sell, stocks, bonds, mutual funds, that kind of a thing. Again, this is another type of account that your bank may offer. Key features include things like, of course, buying and selling securities. There are many types of brokerage accounts, right? Individual joint accounts, retirement accounts like IRAs. So do your research, find out what you're looking for, what are your financial goals. Many brokerage accounts offer services and features such as investment research, trading platforms, resources, customer support, right? Or even financial advisors, investment advisors that can help you on your financial journey, investment journey, and give you more information. One thing to look out for with brokerage accounts is many of them have fees, right? Fees and commissions. It depends on what kind of account it is. It might be transaction fees, account maintenance fees, annual fees, that kind of thing, commissions on trades. And of course, brokerage accounts are regulated by government agencies like the SEC, right? Security Exchange Commission. Okay. And obviously, brokerage accounts are very subject to risk. Securities, so bonds, stocks, they fluctuate. And so I'm not a proponent of day trading, especially through a brokerage account. So, I do want to let everyone know that if you're opening a brokerage account, especially if you're trying to manage your own money, you may experience losses, right? So don't start a brokerage account unless you're able to take that kind of a loss, right? It's not somewhere where you want to park your money and try to save it up, right? It's not where you put your emergency fund. It's where you put that discretionary money, that extra money you might have, and you just want to maybe grow it a little bit. Again, do your research. Here's another thing that a lot of people don't know, right? If you don't have any credit, maybe you're a young adult, maybe you have bad credit, right? You could most financial institutions like banks and credit unions offer credit building cards. It's also known as the secured credit cards. They are designed for individuals to, again, establish or improve their credit. Um, Card holders are required to make a deposit upfront, and then that deposit is usually the credit limit on their credit building card, and it protects the card issuer, so your bank and credit union, in case you default on your credit card payments. Right? They'll take it out of that deposit. Generally, the credit limit of your secured credit card is equal or just slightly above the deposit that you made. And of course, this credit card is the information that the purchases, the amount that you owe, the transaction activity. Card issuers report that the payment history to major credit bureaus, right? Responsible use of the card, such as making payments, keeping balances low, can actually help you improve your credit over time. And something to be aware of, obviously, is that sometimes these credit building cards, these secured credit cards, may have higher interest rates and fees. And these fees may be annual fees or late payment fees or foreign transaction fees. So again, before you jump into this, you want to do your research. One great thing about these credit building cards is they're very similar to just regular unsecured cards, right? They could be used for making purchases, paying bills, and building payment history, right? Again, just a reminder, the credit limit on these cards is usually determined by your security deposit and not your credit worthiness. So those are the significant difference between a secured and unsecured credit card. Mortgages. Okay, if you've joined and if you haven't, if you've watched or were a part of our Building Generational Wealth webinar, it's also on our YouTube channel if you want to go back and look at it. It's a great webinar, a lot of fantastic information. One of the steps that we encourage people to take when they're building generational wealth is to buy a house, right? And again, banks, credit unions, many of them offer mortgages. It's a way to build wealth. It's a type of loan designed for purchasing real estate, such as a house or a piece of land. Usually that land that you buy, that house is what secures a loan. Mortgages are typically long-term loans. Could be anywhere between 15 to 30-year loans, right? So features include, again, the purpose is to buy real estate, without paying the full purchase price up front. There are many types of loans, right? Fixed rates, adjustable rates, government-backed loans like an FHA loan, VA loan, down payment assistance loans. I do want to plug the Cal HFA. They have a California Dream for All appreciation loan happening right now. It's available. There's a link to it. It's a great program where they provide you with a down payment assistance in return for shared appreciation of the property you buy. So not going to jump too much into it, but I do want to plug it. It's available now. Funds are limited. There's a link to it. Go check it out if you're looking to buy a house and need help with down payment assistance. Talking about down payments, obviously, with a mortgage, borrowers are usually required to make a down payment. The down payment varies widely depending on the type of mortgage you get. Interest rate is accrued over time, which borrowers pay off with the principal. And of course, if borrowers fail to make mortgage payments, they risk defaulting on the loan, which usually ends up to foreclosure. And that's where a lender takes possession of the property that is securing that loan, right? A little bit of caution about banking products. Again, not a lot of people know this type of things, but want to make sure you're aware of it, right? Many banking products have fees, and that's kind of how the bank makes its money, right? So there's monthly account fees, transaction fees, service fees, minimum balance fees. Whenever you're looking to open an account, any type of account, could be an IRA, could be a checkings account, could be an investment account, right? Brokerage account. You want to check the fees, right? This is how a lot of people get hurt. So I'll give you an example. If you have a checkings account with a minimum balance, or maybe you have to do certain things, right? Make a direct deposit monthly or something like that, and you don't, maybe you miss it, maybe you go under your minimum balance, those fees might be very high, right? Could be $20, could be $50. So again, check on those. Make sure those aren't uh, eating into your account. One thing I hear a lot about is individuals with a checkings account might have a low balance, and there might be a fee for writing a a bad check, right? So you write a bad check, and then there's like a $35 fee for a bad check, and so your account is already overdrawn, and then you go even deeper into debt, right? So just be aware of those fees. Not all banking products are FDIC insured or NCUA insured, right? So if you're opening like a brokerage account, likely not FDIC insured, right? So again, double check that, especially if you're trying to decide what product is safe, or reaches your different level of risk, right? Um, Interest rates is something you always want to look at, right? There is a difference between APR, APY. This is not the webinar to talk about that, but just be aware of those type of things. So again, whether you're getting an interest rate return on your certificate deposit, or whether you're getting a mortgage, look at the APR, look at the APY, and that's essentially the interest you're getting or the interest you're paying the bank. Uh, Regulatory changes, right? You don't have to stay up to date all the time, but again, if you have a brokerage account, you may want to be aware of the different regulatory laws, legislation that's happening that may affect your brokerage account, or different laws that might be affecting your checkings account, savings account, right? Okay. Oh, and of course, this is another one a lot of people don't think about. Um, I always talk about this in my presentations when I go out and I talk to individuals. Please close your unused bank accounts, right? You can actually, I believe you could go check your credit, and it'll tell you if you have, I want to say it'll tell you if you have open bank accounts. I'm not 100% sure about that. But if you believe you have a bank account, right, I'll give you a story. Uh, One of my nephews, when he started college, did not have a bank account. So he signed up for a local credit union that was at the university. He needed a place to put his money. He just signed up for it. 10 years later, after he graduated, moved on, he used up all the money in the bank account. I think there might have been like $10 or something in there. And he was telling me about this. He was like, I didn't remember having this credit union account in 3 states away back when I was in college. Uh, Someone had stolen his identity and was using his bank account, right? So again, if you have unused bank accounts, go back, close them if you can, right? It could be as easy as sending a letter or getting the banking on the phone and just letting know, hey, I'd like to close this account. Because again, banking activity that's happening and you're not aware of could hurt you. So check on that. Okay, one thing we always talk about in our fraud prevention webinars is, of course, protecting yourself from bank scams, bank frauds. Just want to quickly highlight some things to help you. So, keep your personal and financial information secure. Don't share it, obviously. So passwords, logins, PIN numbers, account numbers, don't share it with anyone, right? You might get a text message that says, this is your bank. We need you to log in. And they give you a link, right? Don't click on those links, right? If you're concerned, go directly to the bank website and log in there, because the link that they send you through a text message could send you to like a fake website, and when you type in your login information, your password, your PIN number, they're collecting that information to access your account. So again, keep your information secure, go directly to the source, right? Here we are again. Be cautious of those phishing scams, right? Those text message scams, even phone calls. Individuals who are posing or acting like they're your bank, and want to ask you personal information, trying to get access to your accounts. Regularly check your bank statements and account activities. I do this all the time when I budget, right? I budget monthly. And when I do that, I go back and I look at all my transactions. Sometimes I look at something like, I don't remember ordering that from Amazon. So I have to ask my wife, did you order this from Amazon? And she'll be like, yeah. I'm like, okay. But yeah, it's a great way to, again, monthly, just check on it, make sure you don't have any weird activity happening, someone stealing your identity and making all sorts of weird transactions. I would say many, some banks and some credit unions offer transaction notifications, right? So if a transaction goes over like $1,000, they'll send you a text message to let you know that this is happening, or maybe a notification about a deposit about a certain amount. Check your bank if they offer this service. And of course, you always want to use secure networks when doing online banking. Avoid accessing sensitive information over public Wi-Fi networks. And of course, use two-factor authentication, right? I know it's a hassle. But my investment accounts where I have literally hundreds of thousands of dollars, I use two-factor authentication because that's a lot of money and I don't want to lose it, right? This is your money, you've earned it, it's hard earned. Just a little bit of inconvenience gives you a lot of security. So consider two-factor authentication, right? Okay, and we're coming up on the end. Again, please add your questions to Q&A. I will answer them in a minute here. If you need help with your bank or credit union, the DFPI is a place where you go. There's a link to us, right? dfpi.ca.gov. You can submit a complaint about, if you're having trouble with your bank, where do you go, right? You could go to us, submit a complaint, we'll help you. You can also go to the Consumer Financial Protection Bureau. There's a link to them. You could submit a complaint to them. The Office of the Comptroller of the Currency, they regulate national banks, so like Wells Fargo, Bank of America, Chase, those big banks. You could go there, you could get help, file a complaint as well. Again, we've been talking about the National Credit Union Administration, also known as the NCUA. You could also go there and get help if you're having trouble with your federal credit union. So yeah, different places where you get help. And now we're at the Q&A session. I'm just going to move on one more slide and keep that slide up while I answer your questions. So a little bit, just a kind of couple different reminders. We have a virtual financial literacy resource fair. It's happening April 24th this month at 2 p.m. Register it. It's going to be a great webinar. We're going to talk about the highlighted topic for our financial literacy resource fair is frauds and scams. We're going to talk about like AI frauds and scams, talk about how to protect yourselves. We're also highlighting a couple different vendors. They're going to come on and talk about the different things that they have available. So register for the webinar. It's going to be great. If you can't join the live webinar, that's fine. Everyone who registers is going to get a link to the YouTube recording and also a copy of the slides. And of course, next month, our financial education webinar will be on starting your own business. May 8th at noon. Register for the webinar if you can. Okay, answer your questions. Put it into the Q&A feature if you can. Let's go to the first one here. Are you willing to share your PowerPoint presentation? Yes, you will get, everyone who registered for this webinar will be emailed. I'll send a follow-up email. It'll have a copy of these slides, and it'll also have a link to this webinar recording. So you could watch again, you could share it, send it out to your friends, family. We want everyone to learn, right? Are money market accounts FDIC insured? So some of them are. I want to say many of them are. But it depends. I would say it depends on your financial institution. I can't say all of them are, but I would say many of them are. So again, if you're looking to open up a money market account, check to make sure that it's FDIC insured, right? Or if you're with a credit union, it's NCUA insured. Okay. Thank you. It's a great question here. So the differences between a money market and high yield savings boils down to minimum balance requirements or how many withdrawals per month year. The answer is yes. So the biggest difference between a money market account and a high yield savings is that a money market has uh, it gives you the ability to use like a debit card, right, or write a check against that account, right? So let's just say you have $10,000 in a money market account. Um, you could use it just like a checkings account. You're right. There are a number of transactions that you could do, but they're usually kind of a high number, right? Um, so again, check the money market account on the limits on how many checks you could write, how many debit transactions you could do. With a high yield savings account, you can't use a debit card. You can't write a check against it. You can go to your bank and withdraw money. You can also use a debit card, go to like an ATM and withdraw money out of the high yield savings account. Yes. So again, two different products. They're very similar because they offer high interest rates. However, the biggest difference again is the how you use the account. Money market, you can write checks against it, use debit card. High yield savings account is just a savings account, right? With a higher interest rate on it. So great question. Next question. Can you explain the benefit of credit freeze and why you may need it? Yes. So if you are a victim or become a victim or think you become a victim of identity theft, you want to go to the three credit bureaus, right? TransUnion, Experian, what's the other one? You want to go to each one of them and put a credit freeze on your credit. And why do you do that? That's so that whoever's stolen your identity can't use your information to open accounts, right? So they can't open up a bank account, they can't open up a credit card, they can't take out a HELOC, right, or home equity line of credit. They can't open up a credit card in your name, or get a car loan, that kind of a thing. So credit freeze is incredibly important, and in fact, you can actually put a credit freeze on your credit indefinitely, and it's very fast. It's almost instantaneous. As soon as if you have an account with your credit bureau, right, Experian, TransUnion, any of those, you could put a credit freeze. You log into your account, put a credit freeze, it's done, and that means that not only you can't even open up a brand new account because they're going to check your credit. They're going to see that, oh, there's a freeze on your credit, right? And you could keep that credit freeze as long as you want, right? If you're not going to be getting a mortgage, or if you're not going to be um, opening up a new credit card, it's not going to, it's not going to hurt you at all, right? So if you have a credit card already, you could still use the credit. You can still use the credit on the credit card. You can use those kind of things. The credit freeze simply stops anyone from opening up new accounts. Right. Great question. Okay, let's go to the next one. Um, Max age for starting an IRA. Uh, I'm not 100% sure here, but I believe you could start it when I'm not sure. I want to say at least 18. At least 18. I'm not 100% sure. I'd have to go look. But I think you have to be in 18 or max age. I'm sorry, not minimum age, max age for starting an IRA. I think you could start it whenever you want. I don't think there's a max age. You could be like 70 years old and still working and contribute to an IRA. Um, I'll double check on that. It's a great question. Where can I learn the legitimacy of an online bank, or where can I verify they are FDIC insured? Okay, so if an online bank, it's hard to check the legitimacy. There are a few that are very reputable, right? And I'm not trying to endorse anyone. That's kind of the fine line I'm trying to walk here. I, I would say do your research. Where can you? Um, the Better Business Bureau is usually a great place to go to check on the legitimacy of an organization, but it's not always 100%. But I would say do your research, right? Look into it. Um, there are definitely a few. reputable online banks. If you check their, not just their website, but other third party organizations, they can give you more information on the legitimacy of an online bank. And of course, how can you verify if they are FDIC insured? I believe you could go to the FDIC website and just simply check it. I'm not 100% sure about that. But besides that, if you're opening an account, the account will always say, if it is FDIC insured, it'll say this account is FDIC insured, right? Um, so, great question. Thank you. How can a person save if their bank account goes to zero at the end of each month? You can't, right? How can you save money if your bank account goes to zero at the end of the month? It's hard to save. I agree. What I will say here is budget. That's kind of the best way. If your bank account is going to zero, and of course it's not your fault. I mean, as in like, it's usually not the bank's fault that your account is going to zero unless there's like minimum balances or some kind of account fee that they're hitting you up every month. That could definitely be taking your bank account to zero. But what I would say is you got a budget. If your account, if you are literally living on the margins, right? You're living on the edge where you're basically spending as much as what you're making and you're not saving anything in your bank account, I'd say you got a budget better. And we have a whole webinar, we have like 2 webinars on budgeting. So go check that out. It's on our YouTube channel. It's a great webinar. Both of them are. You know, again, feel free to hit me up. I've done budgeting workshops. I've done budgeting one-on-ones with individuals, and we talk about finances, expenses, debts you might have. So again, I hope that answers your question. All right. Equifax, yes, thank you. That's the other credit credit bureau. What do you do if you have more than $250,000? Open multiple accounts to make sure it all is FDIC insured. The answer is yes. If you have more than $250,000 in an account and you want to make sure that it is safe, right? It is insured. You could go to another bank and open up another account. I do not know it. Again, banks have different policies. I don't know if you could open up 2 savings accounts at the same bank. I'm not sure. Some banks may allow that, some may not. But what I would do if I had more than $250,000 is I would go to a different bank and split the difference, right? So maybe $200,000 in this savings account that's FDIC insured, and maybe another account, $200,000. Make sure they're both insured. And the reason why I'm saying $200,000 instead of 250 is so that I'm assuming that there will be an interest rate and that the money will grow, and I'd like to have that interest that you earn also be insured, right? So you can do that. No one's stopping you. It's not against the law. You can go open up as many bank accounts as you want to make sure your money is safe, right? And diversifying your bank services might actually be very helpful to you as well, right? You're not stuck with using just one bank. You have multiple banks where you could withdraw money if you need to. So, great question. Thank you. Next one. I'm retired. I'm living on Social Security and a small pension. Can I get a car loan without having proof of a job? So, this is more of a depends question, right? Again, not a financial advisor. I can't say for sure. It depends on the car, depends on the car loan, it depends on the bank or institutions you have. For the most part, I know that credit unions are very helpful to their members, right? Because again, they tailor towards their community. So if you have a credit union and you're on a limited income, work with your credit union, right? They're again, just go in, talk to someone. They'll definitely help you out. You're a member, right? You're an owner of the organization. It's a nonprofit. So I hope that answers your question. Yeah, there you go. Great, thank you. Go to the FDIC website, search for Bank Find, and it will give you a list of banks that are participating in FDIC insurance. Thank you. How can we protect ourselves from impulse purchases? Retailers estimate about, most of us spend about 50% on items we do not plan to buy. You know what? Again, go check out our budgeting webinar. We talk about how to put things in place to stop impulse buying, right? It's a great webinar. It's not just learning one thing, but it's holistic things. A lot of great tips and resources. Check it out. I'm going to give you the short version. Protect yourself from impulse buying. Number one, use cash, right? If you don't have enough cash, you're not going to do it. Number two, if you have a budget, you know that these impulse buys are not in your budget, so you're not going to do it. And number three, right? Have someone there to hold you accountable. My story is I'm a sucker for tools, power tools. My wife is my speed bump, my financial speed bump. Whenever I want to buy a power tool, I have to go to her first, and she gives me the green light or not. So I hope that helps you. Um, it is 1 o'clock, but I'm going to continue to answer questions so long as they come in. There was a number of really great questions. If you need to leave, please feel free to leave. Again, this webinar is being recorded. You'll be emailed a link to the webinar recording and the slides. I'm going to keep answering these questions because I don't want to leave them unanswered. And I do want to answer some of the ones that were submitted to us before the webinar. So thank you. Yeah, thank you for attending if you have to leave. Okay, pretty sure there's no max age for IRAs. Yep, that's what I think so too. It's a really great comment here. I don't want to dive too deep into it. Do you have info on using loans to build wealth? Like, like juggling APR, APY, using home equity. Okay, I'm going to give you the short answer here. And I see this because I get this, I laugh too. I get this a lot, especially from like younger adults who watch social media or TikTok and they're trying to get some kind of advice on how to use margins and use HELOCs or home equity line of credits to build wealth. Um, the answer I always give them is there's a lot of risk. There's a lot of risk. You're living on the edge, and there's a lot of risk when you're trying to use HELOCs to build wealth, right? So a HELOC is a home equity line of credit. Basically, you're taking out a second mortgage, or if you have a paid off house, you're taking out a mortgage on your house, and you're using that money to do whatever, right? Maybe you're investing it. Maybe you're paying down a credit card or something. I don't know. I tell individuals it's not worth it. The risk is really, really high. If you take out a loan and you're going to buy cryptocurrency with it, or you're going to take out a loan to buy stocks with it, there's no guarantee that you're going to get a return on your investment, right? However, there is a guarantee that your loan payments are due. So a lot of people, I don't know why, a lot of kids don't understand the risk involved, and they're looking at the opportunity, but they don't look at the risk. And I'm like, take it holistically, okay? As someone who is very very scared of risk, I say don't do it. But people have different levels of risk adversity. So I don't want to share information on that. But it is a great question, right? That people do that. They take out money like cash advances on credit cards. They take out HELOCs to try to invest in the stock market or buy other products, invest in other products. And again, if it works for you, great. But I don't recommend it for anyone. Great question though. Here's a link. Thank you. Let's see. Using a bank to bounce use is using a bank to bounce money back and forth between a 2 to 3 month CD accounts truly a fast way to build money? Okay, so the question is using a bank to bounce money back and forth between CDs, like short-term CDs, a way to build money, to build wealth. It could be, but I don't recommend it. And the reason being is some CDs have automatic renewals. So you got to be on top of your game, right? Especially with these short term CDs. Like a 1 month CD might have like a 3 month renewal, auto renew too. So as soon as the 1 month expires, if you don't tell them, hey, I want to withdraw the money after the CD matures, it'll automatic renew for 3 months. And now you're stuck another 3 months, right? So that's one thing to be concerned about. The other thing I want people to be concerned about is you just got to be on top of your game, right? You're trying to move money, buying CDs, and then having them mature. If you have multiple CDs, which you're trying to get the best rates, again, if it works for you, if this is your hobby and you love this, go for it. I hope you make a lot of money and I hope you do well. But I say for the normal consumer, it's going to be very hard juggling multiple CDs. It's going to be very hard to try to manage that kind of thing. Um, most the reason for a CD is if you have a lot of money. Let's just say you got some kind of windfall, right? So taxes, you get a big tax return, and you don't need the money. So you just want to put that money somewhere aside and know that I could always access it later, let it grow a little bit. Maybe you sold your house and you're going to be, you don't need to buy a new house yet. You could put it in a short-term CD, right? So yeah, that's really what a certificate CD is for. It's not for trying to generate enormous amounts of wealth. But people would do it. That's a long answer. Thank you. Uh, uh, thank you. Thank you. All right. If it is too good to be true, it probably isn't. That is correct. Okay. I do want to answer just a few, very, very few questions that we received um, previously. Can I get a bank account if I'm an immigrant? The answer is yes. You need an I-10 to do that. How do I dispute a bank charge? So if you have some kind of weird charge on your bank account, the easiest thing to do is go straight to the bank, give them a call. Many banks on their website has a way where you can dispute charges. And worst case scenario, you just come to us, right? Submit a complaint to us, and we'll help you figure out how to dispute a charge. Make sure that make sure that everything's okay. Uh, does a debit card build credit? No. The answer is no. Debit cards do not build credit. And the reason being is credit cards are about owing money. That's what a credit card is. You're taking out credit, you're buying something on credit, and then you're paying it back. And so what happens is to build credit, you need to borrow the money and then pay it back. And that information is then given to the credit bureaus saying, hey, look, this person borrowed money, they paid it back. They're creditworthy, right? If you have a debit card, that is directly tied to your checkings account or money market account. And that's money you already have, right? That's money you have in your account. So you're not borrowing money at all. You're actually just using money you already have. And that's why debit cards don't build credit, right? But that is a really good question. Do banks provide financial advisors? Some of them do. Some of them do. Depends on what you're trying to do, but many banks have specialists, right? Could be like an investment specialist, could be a retirement specialist. I'd say go to your bank or credit union and talk to them. Say, hey, I'm trying to invest, I'm trying to save for retirement, and they may have a specialist that can help you there. Do bankruptcies affect my bank account? Sometimes it affects it differently, right? If you declare bankruptcy, which again I never advise, I would not recommend declaring bankruptcies for a lot of different reasons. But how does a bankruptcy affect your bank account? Well, they're going to look into your bank account to see how much money you have, because when you declare bankruptcy, you're essentially defaulting on loans or other credit. And so by declaring bankruptcy and you're going to court, they're going to review what money and assets you have and see if you can actually pay this debt that you owe, right? So that's kind of how bankruptcies affect your bank account. There's a follow-up to his question. It says, how does collections affect my bank account? Two different things, right? Bankruptcies and collections, two different things. Collections are usually, if they go to court, if your creditors go to court, so declaring bankruptcy is a process, but if you don't declare bankruptcy, if you owe money and you're being collected on, those individuals who are collecting on you could get a court judgment. And the court judgment, especially if you don't appear to court or any of that kind of thing, there could be garnishments made against your bank account. Could be, right? The judge may authorize the creditor or debt collector to garnish your bank account, to pay back that debt you owe. They can also freeze your account. It also may impact your banking relationship, right? So banks may not be willing to, again, give you any kind of loans or that kind of thing, especially if you're being collected on. Open up new accounts. You can't do it especially if you're in bankruptcy or being collected on. So yeah, there's a lot of different ways that collections may affect your bank account. I've been really thinking about doing a collections webinar. I'm going to save this question and answer it there. So thank you, thank you. I do want to answer a couple more questions. I know we're over by 10 minutes. If I never had a bank account, why should I start one now? Uh, so nowadays, where transactions, a lot, if not all transactions nowadays, almost all transactions are all digital, right? So receiving money, paying for things are almost all digital. I'm not talking about using your phone, but I'm talking, at least using a debit card of some sort. You can still use cash places, but it's easier to use a bank account to do those transactions, mostly because when you put your money in a bank account, it is often FDIC, very often FDIC insured, could be NCUA insured. So the safety of keeping your money in a bank account is the most important thing, right? Also having access to it. The other thing is banks are very highly regulated, not just by the state, but also by federal agencies. So if you ever have a problem, you could go somewhere to get help, right? It's better than just putting your money underneath a mattress or keeping all your money on some kind of money app or digital wallet where you could lose. Or if you have, let's say, your money in a digital wallet, maybe the company of the digital wallet goes insolvent and your account, all your money in your account's gone, right? It's not FDIC insured. So that's the biggest reasons, right? There's a lot of other reasons, but I'd say those are the kind of top ones. Great question. Thank you. How do you recommend youth begin to build their credit? We talk about credit building cards. This is the best way, right? You turn 18, I think is where it's at. Get a credit building card, right? Put $200, $300 on it as a deposit, as your security deposit, and then just use it for gas. It's like the easiest way to build credit, and then just pay off your balance every month. That's what I recommend for youth. Okay, so that is it. Thank you for all the questions. Thank you for joining. For the many of you who are still left, a lot of fantastic information. I want to say, again, thank you. These slides will be emailed to you, and you'll get a copy of or a link to the webinar recording. Sorry, I'm looking at. Okay, thank you for joining. Please register for our next upcoming webinars. I hope you have a fantastic day. Take care of yourselves and each other. And again, thank you for joining.